And then,
okay, it's turned on now.
and do we see that, Summer?
Mm-hmm.
Yes, we do.
I see in the corner. Yeah,
On
all
Facebook.
good. Looks like.
Okay. All right, so I'm going to start the webinar.
I'm on, Carolyn.
Oh, hi.
Chris.
Hello, everybody. Welcome to the Understanding Social Security webinar. We're going to just get started here in a little while.
Carolyn, turn your turn your sound off on your computer.
Yep. Sorry.
Okay.
Welcome to Understanding Social Security webinar. We're about to get started here in a little over 5 minutes, so please just stand by. Thank you. Hello, we will be starting the Social Security webinar in about 5 minutes. Thank you for holding. Hello, we'll be starting the webinar in about 3 or 4 minutes. Thank you for holding. Good afternoon. We will be starting the Understanding Social Security webinar in about 3 minutes. Please stand by. Hello, everybody. We are still waiting for a few more people to join the big seminar today, big webinar. So we are just going to stand by and wait for a few more people to log in. Thank you for holding. Hello, everybody. We're going to wait about 1 more minute and then we will get started. Thank you. Okay, let's get started. It is just a little bit after 2 o'clock. And good afternoon, Patelco Credit Union members, and welcome to Understanding Social Security. My name is Carolyn Wilson, and I am the Director of Investments and Insurance at Patelco Financial Solutions. We are so excited to bring this important topic to our members today. Social Security is complex, and the rules change frequently. That can make it difficult to navigate. So we are here to help clarify some of those mysteries today, and of course, help with retirement needs you may have. Our partner for this webinar today is Protective Life. We've had a close relationship with Protective Life for many years. They've been gracious enough to bring us a nationally known speaker, Jody Harris. Jody will speak on Social Security for about 40 minutes. After that, there will be an extensive Q&A session. You are encouraged to type in your questions in the Q&A section as you think of them during the presentation. All participants are actually on mute right now, so we are using the Q&A section. At this time, I would like to turn it over to Drew Rich, Regional Director at Protective Life, to introduce our speaker. Drew, I think you're on mute.
Oh, there we go.
There we go.
Okay, thank you, Beth. I wasn't letting me unmute myself. Well, hello, everyone. Thank you so much for joining us today on our webinar on understanding Social Security. I hope it's very helpful for everyone. Again, my name is Drew Rich with Protective. We partner with Patelco in the retirement planning process to provide guaranteed income solutions so you can live comfortably in retirement. We actually do have a product that could help you even delay when you need to start taking Social Security. So please ask your financial advisor for more information about that. Now I'm here to introduce our speaker, Jody Harris. Jody has worked for the Social Security Administration for over 34 years, 10 of those years serving as public relations officer. He has held staff member positions to both the commissioner of the SSA and a United States Senator. At the time of his retirement, Jody's title was Public Affairs Specialist of Alabama, which saw him responsible for all SSA education and outreach programs within the state. And he is here to join us today. I'll turn it over to you, Jody. Thank you.
Thank you, Drew. Thank you, Carolyn, and good afternoon. I'm glad to be able to spend a little bit of time this afternoon and try to teach you some about Social Security. I want to stress to you from the beginning that Social Security employees do not provide financial guidance. It is critical that you meet with your advisors before you contact Social Security so you can make a good financial decision for you. Today, we're going to talk a little bit about the history of Social Security. We're going to talk about your benefits, when you can file, what your choices are, some filing strategies you might have, how the different benefits work, everybody's favorite, some taxes you may owe, and then we're going to do just questions and answers at the end. So be sure and go ahead and type your questions into the question and answer block so we can cover them at the end. Social Security started in 1935. It's 85 years old this year. First payments went out in 1937. The Social Security system has always been set up the same way since the beginning. It has been a pay-as-you-go system that transfers money between generations. It's important you understand that. It's a pay-as-you-go system. It is not a savings or investment program. In 1937, when payments started, the rules were a little different. In 1937, the only person that could receive a payment was the retired worker. There were no benefits available for anyone else. There was nothing paid for a spouse, for a child, for a divorced person. The Social Security did not pay survivor benefits or disability benefits, just payments to the retired worker. In 1937, you could not file for benefits early. You had to wait until your full retirement age of 65 to start your payments. Life expectancy in 1937 was only 63, so it was a good system back then. Many more people were paying in that were drawing out because most retired workers died before they ever got their first check, or if they did start payments, they just got it for 2 or 3 years. So there were about 40 people paying taxes for every person that received a payment. As we go forward, you'll see how that's changed. Today, it's just not as good. Today, 2 big things have happened, or 3 big things. Number one, us baby boomers did not have enough children. We hadn't put as many people back in the front end of the program as our parents did. But the most important thing that happened was Social Security's the life expectancy for the individuals changed. When you move into retirement today, you're not planning retirement for 2 or 3 years like happened in the 40s and 50s. You're now planning retirement for 2 and 3 decades. So you have fewer people paying in on front, more people drawing out on the back, and you're paying benefits to a number of different people today. There are survivor benefits, there's benefits to a spouse, to children, and to disability. So today there is more money going out every month than comes in tax collections. Right now, there's about 2.8 people paying taxes for every person that received a payment. So that's a drastic difference than when Social Security began. So some of the issues people are going to worry about is, well, it's not going to be there for me. Well, today there's about 175 million people that are paying Social Security taxes. About 65 million Americans receive some type of payment every month. And the projections are by 2035, there will be 105 million Americans receiving benefits every month. By the 2035, there's going to be about 2 people paying taxes for every person that received a payment. So, under today's assumptions that the trustees use, the Social Security program will only be able to pay benefits in full to 2034. The trustee report comes out every April or May in the late spring. And the current report this year is no different from last year. It said that if there are no changes in the current law in 2034, late 2034, early 2035, Social Security will not have adequate resources to pay all of the promised benefits. The current law requires payments to be reduced to match the revenue coming in. So if Congress does nothing in the next 15 years, then everyone will take a 21% cut in payments. The trustees estimate in 2035, Social Security will only have adequate revenue to pay 79 cents on the dollar. They can pay 79% of the promised benefit. So it's never going to be a situation of all or nothing. It's going to be a situation of all of something if Congress does nothing. This has happened twice in the past 85 years, and both times Congress took action to increase the revenues coming into Social Security and fully fund the program. I don't doubt that it will happen this time, but I also understand that this is a problem that's going to be 15 years from now. And 15 years is an eternity in politics. So I don't see anything happening this year or next year. We'll just have to wait and see. but pay attention to what happens going forward with Social Security so you'll know what to expect. But benefits at some level will always be payable unless tax collections stop, because it is a pay-as-you-go system. So the Social Security taxes that you paid in September are being used right now in October to pay benefits to your parents and grandparents. And that's the way the system has always worked since the beginning in 1935. So how does Social Security fit into your retirement picture? Well, I know when you're working with your advisor, you're looking at income coming from a variety of sources. You're going to have retirement income from Social Security. You'll have savings. You may have some type of pension, a defined benefit plan, a defined contribution plan. You have savings and investments. You'll have annuities. You'll have insurance. You may have real estate. Some of you may inherit money. You'll have a lot of different pieces in your retirement puzzle, and it's important that you meet with your advisors to use your Social Security piece in an effective manner. So we're going to talk about Social Security today, not your other resources. People ask me, well, what can I expect from Social Security? What can I get? Well, giving you a good government answer, it depends. It depends on how much you worked and earned over your lifetime. The average Social Security retirement check this year is $1,503. The maximum Social Security retirement check for someone starting benefits in 2020 at their full retirement age is $3,011 per month. So if you're a high income individual and you paid maximum Social Security taxes over your lifetime, you could get up to $3,011 per month, slightly over $36,000 a year from Social Security. That's the same as having a $600,000 asset. So that's why I think it is very important that you treat Social Security like a financial asset. Your amounts could be significant. A big thing is Social Security benefits are adjusted for inflation, and you cannot outlive your benefits. Your spouse can receive survivor benefits, and they cannot outlive those benefits. So Social Security can be a significant asset for you as you move into retirement. So first, how are your benefits determined? What do you control? What do you not control? And what the key financial decision you will need to make. Your Social Security benefits are determined different than a pension and things that you're familiar with. Social Security is looking at a snapshot of your entire lifetime of employment. Social Security is going to take the highest 35 years. To qualify for a Social Security retirement benefit, you have to have 40 credits. Some of you old timers can remember when this used to be 40 quarters of coverage. It's not quarters of coverage anymore. Now it's a credit, and it's based on earnings. To earn one credit this year, you need $1,410. So if you earn $5,640 in the year 2020, you have your 4 credits for this year. Once you get your 40 credits, then Social Security is going to look at your highest 35 years of work throughout your entire lifetime. But to benefit you, Social Security will not use your actual wages for most of those years. Social Security will take all the earnings you had prior to age 60 and index those up to what $1 is worth the year you turn 60. So everything before age 60 will become a pretend dollar. Everything from 60 forward will be actual earnings. And I'll give you a quick example of how that would work. Say in 1975, you earned $10,000. That was fair money in 1975. That is poverty level today. When your benefits were determined this year, you received credit for a little over $60,000 for 1975 because that's the value of that $10,000 in today's money, and you're retiring today. You're not retiring 45 years ago. So you take all of your earnings that you had before age 60 each individual year and index those earnings up to what a dollar is worth the year you turn 60. Everything from 60 forward is actual. Then you pick the highest 35 out of that group, add them all together, get a big number, divide it by 420. That's the number of months in 35 years, gives your average monthly wage indexed. That goes into a benefit formula, and that gives your benefit payment at your full retirement age. How do you know what your benefit payment is? Well, you look at your Social Security statement. The easiest way to get one is to go online. If you go to ssa.gov or socialsecurity.gov, click on My Account, My Benefits, or My Statement, answer a few questions, and you can download your Social Security statement immediately off of Social Security's webpage. Be sure and go to socialsecurity.gov or ssa.gov. If you don't do this, if you don't sign up for anything online through Social Security's webpage, when you turn 60, Social Security will mail you a statement, or you can always call Social Security and ask for a statement. So you can't control what you worked and earned over 35 years. You can't control that amount. What you can control, and the key financial decision you will make, is when do you start payments. If you wait until your full retirement age to begin your payments, you get 100% of your money. If you start early, you can start as early as 62. If you choose, your benefits are reduced. They're reduced a fraction of a percent for every month you take a payment early. If you delay taking your payments after full retirement age, you can delay payments up to age 70 if you choose on your retirement checks. And that gives you a bonus. The bonus is 2/3 of 1% per month, 8% per year guaranteed. So this is what you decide. So full retirement age, what's that magic number? Well, it depends on when you were born. People turning 62 this year, their full retirement age is 66 and 8 months. For people born 1960 or later, your full retirement age is 67. And that's what it's going to remain unless Congress takes another action. If you begin payments early, your benefits are reduced. So here's a simple example. If you were born in 1957, so your full retirement age is 66 and a half, and you're due, say, $1,000. Well, if you started at 62, you would only get $725, where if you'd waited to 70, you would get $1,280. You can dramatically change your payments the longer you wait. And this is the key financial decision you will need to make. Remember, if you're 65 years old right now, the average male is going to live almost 20 more years, and the average female is going to live almost 22 more years on average. But a more interesting stat, if you're 65 years old right now, there's a 1 in 3 chance that one of you will live to at least 90. So you need to look at Social Security like you would your other financial assets. Some things you might want to think about. How's your health? What's your family history? What's your longevity? Do you need the money right now, or can you wait? Do you want to use other resources now and hold on to Social Security and let it grow? Or do you want to use the Social Security now and conserve your other resources? Are there other people that can get a payment when you start yours? Can you get a payment somewhere else? This is why it's so important that you meet with your advisors before you contact Social Security. Social Security employees won't go through this decision tree with you. They will just ask you, what month do you want your check to start? So you need to have a plan when you contact Social Security. When you get ready to file for benefits, you'll be asked a series of questions to help determine, are there other people that can receive payment off of your record, or can you receive payment somewhere else? If they're a spouse, are you currently married? If you're dead, are there survivor benefits? Are there any survivors anywhere? Has there been a prior marriage? Social Security pays benefits to divorce. So let's start with spouse payment. Your spouse, if they wait until their full retirement age to file for anything, can receive an amount equal to 1/2 of your full retirement amount, or their own, whichever is more. They don't get both. Now, some important rules for the spouse. Number one, your current spouse cannot file for any benefits off of your record until you file your own retirement claim. You must start your retirement benefits before your current spouse can get anything off of you. When your current spouse files for spousal payments, they must file their own retirement claim at the same time. They get the larger of the two, not both, and they cannot pick and choose. If your spouse files for benefits before their full retirement age, they're locking in a reduction. They can start benefits as early as 62 if they choose, but if they were born 1960 or later and they start at 62, instead of getting 50% of your amount, they're only going to get 32.5% of your amount. So remember that your current spouse can get benefits off of you, but they get the higher of what they're due on your record or what they're due on their own retirement record. They do not get all of both. They get the larger of the two. When you file your retirement claim, does not impact your current spouse. Their benefit is based off of half of your full retirement age and their age when they file. They're not impacted if you start payments early, and your current spouse, while you're alive, cannot get any of the bonus you earn by delaying your payments past your full retirement age up to age 70. The most they can get is half of your full retirement amount or their own, whichever is more. Now, let's talk a minute about survivor benefits. A widow or widower can receive benefits at their full retirement age. If they wait until their full retirement age, they get 100% of what you would have been due if you were alive that day. Now, that's government speak, and let me tell you in English what I just said. When you get ready to file your own retirement claim, you're making a decision about what you will receive today and what your surviving spouse will receive tomorrow. If you elect to start your own retirement payments before your full retirement age, you're taking a reduced check. You are capping what your surviving spouse can receive. They can get no more than you would have received had you continued to live. A widow can get the bonus you earn by delaying your retirement benefits past your full retirement age. That 8% per year you earn up to age 70. So a widow can get a bonus where the spouse cannot. Widows can begin payments as early as age 60 if they choose. But again, there's a penalty. They get reduced by 28.5% if they start at 60. They can start at 50 if they're disabled, but most are going to qualify at 60. Then, an important distinction for the widow. A widow can collect survivor benefits and defer their own. You can elect survivor benefits or a death benefit, and your own retirement payment or a life benefit. You can always pick and choose between the two, so you can decide to defer one and take the other one to eliminate a penalty. And I'll give you an example of how you could do this, and it involves, my sister's an example of this. My sister is a widow. Her income was always higher than her deceased husband. She recently retired from her company. She plans to start survivor benefits off of her deceased husband's smaller Social Security record at 63. So she's going to take the lower survivor benefit, and then it's going to be reduced because she's taking payments before her full retirement age of 67. So she's going to take the smaller payment and then make it even less because she's taking it early. She is going to defer taking her own retirement payment until age 70, where she will earn a 24% bonus on her higher Social Security amount. And at 70, she's going to switch from the smaller survivor payment to her own retirement payment because it is going to be substantially higher. And she'll get that the rest of her life. She'll get 7 years worth of survivor payments that will not impact what she receives on her own retirement record going forward. If you are a widow or you're concerned about this, you need to meet with your advisors before contacting Social Security to make sure you file for benefits in the correct sequence to maximize your retirement income. Then let's talk about divorce benefits. First, for divorce benefits, you had to be married 10 years or more. If the marriage was less than 10 years, you get nothing. If your ex is alive, you can file for benefits as their spouse as soon as they turn 62 if you are also 62 or older. You do not have to wait on them to file a claim. Benefits payable to a divorced spouse have no impact on anything paid to the worker or anything paid to the current spouse. If your ex remarries, they lose the benefits off of you. If that marriage ends, they can come back on yours. They have to be 62 or older and not married. Now, if you are dead, they're eligible. Your divorced widow is eligible for the same thing that your regular widow is eligible for, as long as the marriage lasted 10 years or more. A widow or divorced widow can remarry and keep the benefits as long as they remarry after 60. 60 is the magic number. Remember, if you're alive and your ex remarries, they lose the benefits off of you. If you're dead, they can remarry and keep the money as long as they remarry after 60. Now, some of you work for government agencies and you do not participate in Social Security. You qualify for a government pension, but you did not pay Social Security taxes at that government employer. There are two provisions that could impact your Social Security benefits. The first is called Windfall Elimination Provision. You'll see it abbreviated WEP, WEP. This is for people that qualify for a government pension from an agency where they did not pay Social Security taxes and they have worked at least 10 years somewhere, so they have their 40 credits. They're eligible for a Social Security retirement payment. They worked somewhere at least 10 years and paid Social Security taxes, so you're eligible for a Social Security retirement benefit. That Social Security retirement benefit is determined using a modified formula that will reduce payments up to $480 per month, but you still get something. You get something from your Social Security retirement account. It will not eliminate your Social Security retirement check completely. That's the bad one. This is the awful one, government pension offset. So you're that same person, you work for an agency where you did not pay Social Security taxes, and you file for benefits as a spouse or as a survivor off the Social Security record of another person. That spousal payment, the 50% share, or that survivor payment, the 100% share, are figured just like normal. Then Social Security will take 2/3 of your monthly government pension amount and subtract that dollar for dollar from anything you're due as a spouse or as a survivor. And most of the time it makes that number 0. You get nothing off that other person's record. So the windfall elimination provision affects your own Social Security retirement check. You still get something. There's just an offset. The government pension offset affects your spousal or survivor payments, and it may completely eliminate any benefits you're due off of those records. Now, some things that affect many of you or could affect you. If you are working and receiving any type of Social Security payment before your full retirement age, there are restrictions on your earned income from employment. This only applies to people receiving Social Security benefits that have not reached their full retirement age and they are working. The limit this year is $18,240. You go over that, you will lose $1 in Social Security benefits for every $2 you went over the $18,240. Once you reach your full retirement age, that month, the work restrictions disappear. You may work and earn as much as you wish your full retirement age or older, and it does not impact your monthly Social Security payments at all. They only apply if you're under full retirement age. Now let's talk a little bit about taxes, and people get kind of confused here. You know your wages and self-employment are taxed while you're working. That's the FICA tax. Well, for many of you, the Social Security benefits you receive will be taxed on your federal income tax. And I'm not a tax expert, but I want to give you a little bit of an explanation, and you need to talk to your advisor about this. But to determine if your Social Security benefits are taxable, you have to look at your provisional income. That's all your income from wages and self-employment, pensions, investments, plus any non-taxable interest and dividends, plus half of your Social Security payments, plus half of your spouse's Social Security payment. You will get a 1099 from Social Security each year. These numbers add up to $32,000 or more for a joint filer or $25,000 for a single filer. Then you will owe federal income tax on a portion of your Social Security benefits. The numbers add up to $44,000 for a couple or $34,000 for a single filer. Then you will pay federal income tax on 85% of the Social Security benefits you receive that year. This is taxed as ordinary income at whatever tax bracket you fall into. So just be aware of that when you start receiving Social Security benefits, you may owe federal income tax on a portion of the Social Security benefits received. How do you file for benefits? The easiest way today is to go online and go to socialsecurity.gov or SSA.gov, or you can file by phone. Right now, you cannot file in person. All of the Social Security offices are closed to the public. But you can go online and file a claim, or you can do it by phone, whatever's work. Just remember, it's important that you meet with your advisors before you contact Social Security so you understand what benefits you want to file for and when, and understand how this is going to fit in your financial plan for your retirement. So your retirement Social Security is just one piece of the big picture your advisors put together for your retirement. Use it wisely. Now, we got time to answer some questions. Carolyn, are there any questions in the question and answer box that we need to address? You can feed them to me.
There's plenty, and I think that Drew is going to feed those to you.
Okay.
Drew?
We have gotten quite a few, so I apologize. I've been trying to manage the ones that we can answer simply. So I'm just going to go down the list here, and just for everyone's point of reference, we've got about 20 minutes to do this. So I apologize if we don't get to everything. If we don't, then we can always pass those along to financial advisors here at Patelco. So first one, my wife is getting reduced Social Security now because she took them at 62 and I am on her spousal benefits. In 3 months, I will be getting on my own Social Security because I'm turning 70. Can my wife get spousal benefits based on my Social Security? If so, will they be reduced by a percentage because she took her benefits early?
The answer to both is yes. She can file for benefits off of your Social Security record once you start, but because she took her own retirement payments before her full retirement age, she has locked in a permanent reduction, so she will never get 50%.
Okay.
And remember, hers is based off of half of your full retirement amount, not half of your age 70 amount.
Great. Thanks, Steve, for that question. Teresa, I just turned 62. I'm retired with a PERS pension and I qualified to draw Social Security. I do not plan to work in the future, hopefully, so I will not be contributing to SS anymore. My question is, if I take Social Security now at age 62 instead of waiting until full retirement age 67, in my case, would I get much more in monthly payments if I do wait until 67?
You'll get 30% more if you wait until 67.
Okay.
If you full retirement age is 67 and you start at 62, you'll have a 30% reduction.
All right. And then from Anonymous, I was told that if your spouse has taken Social Security and receiving payments that you are eligible to receive spousal Social Security, even if you are still working and paying into Social Security. Is
That's not correct unless you're over full retirement age. If you're under full retirement age and you make more than $18,240, Social Security is going to start pulling payments back.
Okay. Alejandro asks, I retired in 2013 from working for the state of California. I currently receive a pension. I previously worked for other counties and paid into Social Security. I understand that I can retire at the age of 62, however, fall under the windfall elimination program and my payment will be 400 less. Is this correct?
Yes.
Okay, and then is it in my benefit to retire at 62?
You'll need to meet with your advisor and look at your numbers, but unless you had 30 years of work where you paid Social Security taxes, then the windfall elimination provision will impact you, and your Social Security payments will be reduced up to $480 per month.
Okay. Then Mark asked, and then I have to preface this, we can't tell you how to vote on certain things, but Mark asked, should voters support the creation of personal retirement accounts as a fix to Social Security system, as the Heritage Foundation suggests, or should voters support raising taxes?
I have no idea.
I don't either, but so I'll tell you how to vote. My wife is 67, still working, and wants to collect Social Security and was entitled to 2,600 plus, works at a 60K job here in San Francisco, but we are confused as to how we will be taxed as a couple.
They'll pay federal income tax on 85% of the Social Security benefits they receive.
Okay.
It's ordinary income.
All right, that was William that asked that question. Emily asks, I will take my Social Security benefits at 62 years old. Am I also able to collect Social Security benefits from my husband, assuming he is alive when I am 62 years old?
You get the larger of the two, as long as your husband has filed his own retirement claim.
Okay.
If he has not, you cannot, but you get the larger of the two, not both.
All right, and then Della asks, I'm currently receiving survivor benefits. Am I correct in thinking that I lose those when I file for my own Social Security benefits? Yes.
You will get the larger of the two, not both.
Okay, if I take Social Security at age 62 and then work some until I'm 67, would the extra time I've worked after I started taking Social Security adjust the benefit at 67?
Yes, it would, if those earnings are higher. Social Security every year will refigure your benefits automatically and give you credit for the highest 35 years. So between 62 and 67, if that's lower than the 35 years they earned at 62, it will not impact your benefits because your benefits cannot go down. They can only go up.
Okay, and then Anonymous asks, recently married to my wife. Her ex-husband also remarried a couple of years ago. I understand my wife will not receive my Social Security if something happened to me if we are not married for 10 years. My question is,
No, that's not correct. You have to be married 9 months. 10 years is for a divorce.
Okay, and then my question is, will my wife receive Social Security from her ex-husband if something happened to me before 10 years?
If something happens to him, she can get benefits either from her ex-husband or her current husband or her own, whichever is more.
Okay. And then how about survivor's benefits? Can the widowed survivor collect Social Security, theirs, plus survivor benefits?
Not plus, it's the larger of the two.
Okay. If someone is collecting Social Security and they owe back child support, can you still collect from the, I'm getting it's weirded a little strange, but I think what they're asking is,
they can garnish your Social Security to get the back child support payments.
Yes, I think that's it. No, okay. We'll move on. Trudy, can I look up my survivor benefits on the Social Security website?
No, you will have to call Social Security and provide enough information for them to be able to verify that you were married to that individual, and they can give you an estimate over the phone. The only one you can look at online is your own personal retirement benefits.
Okay. And then Lynn asked, some of my highest earning full-time paid years were working for UCLA from 90 to 97. I received my Social Security lifetime earning statement 5 of my 7 UCLA years, for some reason, did not pay into Social Security or FICA Medicare via deductions from my paychecks. So she's upset that it doesn't show that it shows in there. How does she go back and find out that information?
She can call Social Security and ask them if they have those earnings, and usually they can take care of it over the phone.
Okay, great. And then going forward, will entitlements be cut from Social Security?
If Congress does nothing, the current law requires payments to be reduced in 2034 when Social Security starts running short of money. Also, Congress can change the law at any time to change any benefits going forward.
And then Michelle asked, can we receive our Social Security payment to a bank account in another country?
In most other countries, yes. There are some countries that are what are referred to as barred payments, and that's because Social Security can't be assured that you will get the money. It's countries like North Korea, some of those countries, and some countries in Africa too. But, you know, if you're asking about somewhere in the North American, South American continent, you can get it direct deposit to a bank account anywhere.
Or Europe?
Yeah, Europe.
Okay, great. My latest Social Security statement says I'll get $3,165 a month at full retirement age. But it's something you said in your presentation, the max payment is $3,011 per month. If that's true, why is my statement showing a higher amount?
The $3,011 is the maximum Social Security payment due in 2020 for a person reaching full retirement age this year. So if that person that is the 3,000, whatever it is, remember that's an estimate, but that is obviously for a future year, not for 2020.
Gotcha. Okay. And then Debbie asks, I am 62. If I lose my job due to the pandemic and took Social Security now, if I get a new job in 1 year paying over 50,000, do I have to pay it back, or will they just reduce my Social Security pot of money when I start to collect again?
Well, you have two choices. If you get a new job before 12 months are up, you have the option to withdraw your claim. You have to repay all the Social Security benefits received, no interest charges, and then you start over again at a later date, whatever you want to do. Or you can just say, I want to keep the money I've already gotten. I'm going to make $50,000 a year in 2021, and they will adjust your Social Security benefits immediately and stop your payments to make sure you're paid the proper amount. But the important thing is if you return to work, contact Social Security and let them know you've returned to work and how much you think you might make that year.
Okay, great. And then are domestic partners eligible for survivor benefits?
If the state recognizes a same-sex marriage, then yes. If the state you're in does not, then no.
What if you are just domiciled?
If you're domiciled, unless it's common law, then it's not a marriage.
Gotcha. Cool. David asks, if I delay retirement after full retirement age, how does the 8% annual increase break down for a mid-year retirement?
It's 2/3 of 1% per month.
Thank you. And well, I think this is how should I navigate when to draw from an ex-spouse? Do you have any answer on that, or is that more of a question of circumstance?
That's meet with your advisor.
Yep. Okay. Excellent. And then David asks, have you heard of www.opensocialsecurity.com?
No.
Okay. So then we can't speak to the accuracy of the calculation then either. So I would urge you in that sense to go to the Social Security website.
Right.
Directly.
That's why I said be sure you're going to socialsecurity.gov, G-O-V, not .com.
Yep, correct. Okay. And then William asks, my wife retired 2 years ago at 62 years old and began receiving Social Security at 62. I will be signing up for benefits at my full retirement age of 66 in 2 months. Is my wife entitled to increased spousal benefits when I sign up? And will her benefit be automatic, or do I have to request Social Security to review her benefits?
She could be entitled to benefits if half of his full retirement amount is more than half of her full retirement amount, not what she's receiving, but what she would have been due at her full retirement age. Then she will get an increase as a spouse. When he files his own retirement claim, she has to file a claim for benefits as a spouse. Social Security is going to ask him if he's married, so they should ask about her, and they'll take care of it automatically if she's due any money.
Okay, and then is this something that they can do online, or do they have to call in?
He can file his retirement claim online. He'll put the spouse information in, and then Social Security will call him and her to confirm it.
Okay, great, thank you. Lynn asks, I began receiving SSDI in 2019, retro to 2016. Am I considered already retired by Social Security Administration?
Well, you've been receiving what type of payments?
SSDI.
Oh, disability. Okay. Disability payments are determined as though you were full retirement age the day the disability began. So you'll receive disability payments until you reach your full retirement age. At that point, you will automatically convert from disability payments over to retirement payments. There's no change in your monthly payment amount. You just do not receive disability payments after full retirement age.
Okay,
but your amount won't change, and you don't have to do anything.
Okay. All right, that answers everything then. Anonymous asks, for my spouse to receive the living spouse's benefit, if she is 4 years older, she cannot get half of my benefits until after I file. Is this correct?
She can get benefits off of his record, but she can't get them until he files his own retirement claim.
Okay. Another anonymous, if my spouse is currently receiving disability benefits and I plan to retire in 2022, can they get 50% of my delayed Social Security benefit?
They only get 50% if they wait to their full retirement age to start the survivor payments. And he has filed his own retirement claim.
Okay.
So he has to file his claim, and if they are full retirement age or older and haven't filed for anything yet, they can get 50% of his or their own, whichever is more.
Okay. Then if I die after taking Social Security at 70, will my spouse automatically get survivor benefits if she is already getting her own?
Well, once you die, she will qualify for survivor benefits, and it will be the larger of what she is receiving or what he is receiving.
Will she have to file for that, or
yes, she will have to file a claim for survivor benefits.
Okay, great. Catherine asks, is there a different rule for spousal benefits for individuals who were born prior to 1954?
Yes. If you were born prior to 1954, you have an option to do a restricted application where you can start spouse benefits and delay taking your own retirement. But if you were born after January the 1st, 1954, you do not have that option.
Okay.
So that only applies to people that are 66 or older right now, and they have not filed for any type of Social Security payment before now.
Okay. If both long-term spouses have earned their own benefits once eligible, is there any reduction in either amount?
There would only be a reduction if one of them was filing before their full retirement age. If you're filing on your own record, there's no reduction because there's another person in the household. They would get their full retirement amount each one do independently.
Elizabeth asks, I am divorced as of 2 years. However, we have not yet executed the marital separation agreement due to things dragged out due to COVID. My ex continues to work past his age 65. I am still 64. Should I now file for Social Security?
She needs to talk to her advisor, but when you say they're divorced but haven't executed them, I don't really understand that. You're either divorced or you're not divorced.
Right. Yeah, I think that's a good conversation for the financial advisor. It gets a little bit more clarification.
I mean, have a judge signed a divorce decree and said you're divorced effective such and such a date, you are divorced.
Yep. Okay, and then Trudy asks, I am a realtor. Can I be earning income and collect survivor benefits?
Okay. You lost me right at the end.
Oh, can I be earning income and collect survivor benefits?
Yes, the work restrictions will only apply if you're under full retirement age. If you're over full retirement age, they don't matter at all. If you're under full retirement age, you can make $18,240. And if you go over that and are receiving any type of Social Security payment, your benefits are going to be reduced.
Okay. Sherry asks, if I was married for 14 years, my ex remarries, and I did not, can I collect his Social Security?
Yes.
A quick answer to that. Yeah. Okay. Julie asks, if your spouse died at age 60 as a widow, what is the base payment of the deceased spouse's benefit to be collected?
The base payment is 100% of their amount because they did not take a payment early. Okay. So you'd be based off of their full retirement amount. And if the widow waited to their full retirement age to get it, you get 100%. If they started early, the survivor payments would be reduced.
Okay, thank you. And I apologize, we have run out of time to answer questions, but we will save these questions, and I urge you to speak with your financial advisors and also talk about that, and we can always arrange for those answers to be sent to you.
Well, thank you so much, Jody and Drew. I have to tell everybody that's still on the phone, I've been in the business for a long time, 3 decades. About 10 years ago was the first time I saw Jody give a Social Security presentation to some financial advisors, and I can tell you that he's probably the most accurate and definitely the most straightforward with answers. So we're lucky to have him, and again, lucky to be able to partner with Drew and be able to bring this great information to you. As Jody mentioned throughout the presentation, most people need advice when making these choices. We have financial advisors available to help you make those decisions. So in addition to the Social Security that they can help you with, they can help with retirement planning, retirement income, 401k, IRA rollovers, financial planning, life insurance, long-term care, wealth transfer, and tax-free income. And we want to share the faces of the 11 financial advisors serving you, our members. They're here to listen to your needs and help provide personalized solutions to get you on the right path towards retirement. They are available to meet either in person, over the phone, or by Zoom. And by the way, our financial advisors have an encrypted version of Zoom for added online protection. We will also drop a web link into the Patelco website in chat. And Angie has done that right now. To locate the financial advisor assigned to your local branch to set up an appointment, just click on that. And then in addition to financial advisors, Patelco Credit Union has certified financial specialists. These specialists can help with debt strategies, creating a budget, monitoring and repairing credit, and non-investment saving strategies. So feel free to schedule an appointment for a specialist through the online appointment tool, which is patelco.org, patelco.com/financial journey. And lastly, we hope you enjoyed today's webinar. Please check our website and join us for future webinars. And remember, wherever you are in your financial journey, Patelco is here for you. Thank you. Have a wonderful afternoon.